Good morning, ladies and gentlemen. Welcome to taxation. We are going to be looking at LO4 deductions. Now, what are deductions? You might be asking yourself. Now, there are things that you are allowed to deduct. For example, if we're looking at in the previous LOs, we calculated our gross income. So we added total salary of the employee, and then we also calculated his taxable benefit on his benefits in kind. Say if housing benefit, we calculated his taxable income. We calculated taxable income on his car allowance and so forth. So we've added all these amounts, and then you are then allowed to make certain deductions. That is what we want to look at right now. Now, the general deduction formula, it looks at 4 key concepts. Now, there are certain things that you are allowed to deduct in your business. Now, number 1, any amounts to be deducted, it should be an expenditure or a loss. Now, if you incurred selling expenses as part of your business activities to make your income, you are allowed to deduct those selling expenses. If you incurred any losses, you are allowed to deduct that loss from your income. Are we together? Now, the amount to be deducted should be incurred. What we are saying is that for you to deduct a certain amount from gross income, that amount should have been incurred in your business activities. Now, if we look at, there are certain things that are incurred. For example, if you look at cost of goods sold, you bought inventory so that you can sell it in your shop. Now, the cost of those goods, you actually paid money, or you actually incurred them and paid money for those goods. Therefore, you are allowed to deduct the cost of those goods. However, there are other things that you are not allowed, which are not incurred. For example, depreciation. Depreciation is an amount which is deducted from the income statement. However, it is not incurred, as in you do not actually pay out money for depreciation. Therefore, you are not allowed to deduct depreciation for tax purposes. The third principle is that these deductions, or these amounts that you are allowed to deduct for tax purposes, should have been incurred in the production of assessable income. We are simply saying that they should have been incurred in your business activities. You are not allowed to deduct costs or expenditures which are private, so to speak. Now, the fourth principle is that these expenses that you are deducting, or losses, they should not be of a capital nature. So you are allowed to deduct expenses such as inventory, or what we call cost of goods sold. But you are not allowed to deduct the cost of building a warehouse, because a warehouse is a capital expenditure. So if we're looking at this is what I just explained: expenditure and losses. And then we talked about it being incurred. Therefore, you definitely should have incurred it for you to deduct it from gross income. Depreciation is not incurred, therefore you are not allowed to deduct. However, other expenses, selling expenses, inventory expenses, these are incurred. These are things that you actually pay money for, and therefore you are allowed to deduct them. Yes. In the production of assessable income, this should be all these expenses should be business expenses. Private expenses are not allowed to be deducted. Anything which is not of a capital nature. So if you build a warehouse, build a factory, all these are capital expenditures, you are not allowed to deduct them from gross income. Now, there are other things that you are allowed to deduct, what we call specific deductions. Now, of course, you are going to need to repair your machinery so that your machines run smoothly in the course of business. Such expenses you are allowed to deduct. Bad debts. You are allowed to deduct bad debt as long as it was actually incurred. Now, there is what we call provision for doubtful debt. Now, a provision for a doubtful debt, you have not actually incurred a loss. You see, a bad debt, this is where a customer fails to pay, and after, say for example, 6 months due date of expecting the money, you end up writing it off from your books that you are not going to receive the money from the customer. So it is a bad debt, you have made a loss. That one you are allowed to deduct from your gross income. However, there is what we call provision for doubtful debts. This is whereby it's just an allowance, like depreciation. You have not actually incurred a loss, you're just making a provision that there is a probability that, say for example, 10% of our customers are going to fail to pay. Now, the fact that it is a provision, it is not allowed to be deducted. Contribution to approved funds, pension funds, superannuation funds, retirement annuity contributions, you are allowed to deduct those ones subject to limits. Legal expenses, you are allowed to deduct as long as it was incurred as part of the business, not personal legal expenses, and also as long as it was legal. If you happen to incur legal expenses for bad behavior, things like parking fines, those ones you're not allowed to deduct. Okay. Research, yes. Research costs are allowed to be deducted. As long as the research has to do with the business activities. You're allowed to deduct interest charges which you incurred on loans as part of the business. You are allowed to deduct educational and sports donations. Your sports donations should be minimum 1,000 pula. Anything less than 1,000 pula, you're not allowed to deduct. Above 1,000 pula, education and sports donations, you are allowed to deduct. Now, you will entertain when you entertain, say, your customers or you entertain your employees, you are allowed to deduct the entertainment costs. You are also allowed to deduct assessed losses. This is where you incurred a loss as part of the business. You are going to deduct those ones. Now, we looked at a number of things that you are allowed to deduct. However, there are certain things or certain expenses that you are not allowed to deduct from gross income. All private expenses are not allowed to be deducted. All expenses that are going to be deducted have got to be business, part of the business that you are into. If you are able to recover a loss through insurance, then you are not allowed to deduct that loss, since you are going to recover in from an insurance claim. Now, if you're not allowed to deduct penalties on your taxes, you pay your taxes late and then you incur a fine, that one is not allowed to be deducted. Expenditures of a capital nature, you build a warehouse, you are not allowed to deduct that full cost. And also contributions to unapproved funds are not allowed to be deducted. Now, we have a question there on Sloka. Sloka is a company. Now, Sloka carries on business selling furniture and household goods. The following relate to the year ended 31 December 2015. Now, there are a number of incomes there. Cash sales, credit sales, interest on debtor accounts, bad debts recovered, profit of shares. Now, the thing here is to analyze which ones are taxable incomes. Now, cash sales, it's part of business. That 1 million is taxable. Credit sales, yes, it's part of business. That one is taxable. Interest on debtor accounts, yes, that one is taxable. Bad debts recovered, we are going to tax those. Profit on sale of shares. Now, shares are of a capital nature. Therefore, that 60,000 there is not taxable. And then, if we are to look at expenses, some of those expenses you are allowed to deduct. Now, some of these expenses, now remember the 4 principles that we talked about. Now, that for an expense to be deducted, it should be an expenditure or a loss, number 1. Number 2, it should be incurred, meaning that money was actually paid out for that expense or loss. And then it should be part of the business. It should not be private. And then the last number 4, it should not be of a capital nature. So if we go through each expense, it should tick all those 4 boxes. Now, cost of sales, you are allowed to deduct that 2 million expense. Bad debts written off, we talked about them. They are allowed to be deducted. Provision for doubtful debts are not incurred. Therefore, you are not allowed to deduct that 10,000. Depreciation is not incurred. It's just an allowance. Therefore, you are not allowed to deduct that 120,000. Payments on behalf of employees, yes. That's an expense. It is incurred. It's part of business and it's not of a capital nature. Therefore, you are allowed to deduct that 90,000. Legal expenses. If we look at note number 3, it says that legal amounts relate to the collection of amounts from trade debtors. So it's part of business. That 8,000 is allowed to be deducted. Advertising in the local newspapers, yes, it's an expense. It was incurred. It's business and it's not of a capital nature. Therefore, we're allowed to deduct that amount. Gifts to customers should be deducted, and then annual staff party, 4,000, you are allowed to deduct. Cost of extension to warehouse, 100,000 is not allowed to be deducted because an extension to a warehouse is of a capital nature, and anything of an expense of a capital nature is not allowed to be deducted. Donations to a political party, those ones are not allowed to be deducted. And then finally, other operating expenses which are deductible, you are allowed to deduct the 200,000. Okay.